You can sit in Riyadh and trade currency in London with just a few taps on your screen. It feels effortless, but those taps connect you to a massive, invisible global network. And in that network, you will inevitably find offshore brokers pushing aggressive ads. They offer hundreds to one leverage and instant account approval, stripping away all the friction of getting started. But that friction is usually what protects you. When you deposit money with an unregulated offshore entity, your capital goes directly into their single operating account. It mixes right in with the funds they use to pay rent, run their servers, and cover their own trading losses. If that broker goes bankrupt or simply refuses to process your withdrawal, your money is trapped. You are dealing with an entity in a foreign jurisdiction, which means the Saudi legal system has no authority to intervene on your behalf. This is exactly why the Saudi Capital Market Authority, or CMA, exists. They act as a strict, localized gatekeeper, forcing brokers to adhere to rigorous operational standards if they want to serve Saudi residents. In a market built on high-speed speculation, the CMA protocol is the mandatory baseline for ensuring your capital actually survives. The CMA functions as an active supervisor. The authority conducts rigorous, ongoing audits to ensure brokers maintain adequate financial reserves and transparent risk management practices. The most critical mechanism they enforce is called client fund segregation. This neutralizes the threat of a broker using your deposit to cover their own operational debts. This illustrates segregation. Left, unregulated brokers hold everything in one reservoir. Right, CMA brokers build a strict wall separating operational and client vaults. During insolvency, operational accounts drain to zero. The offshore trader loses everything, but your isolated client vault remains completely untouched. The CMA also sets strict caps on leverage. While a 100-to-1 ratio might sound appealing on a winning trade, a sudden market gap can wipe out your account in seconds. These limits act as a physical buffer against catastrophic, unrecoverable losses. By enforcing segregation and limiting leverage, the CMA replaces a high-risk vacuum with a highly structured financial firewall around your trades. For traders adhering to Islamic financial principles, the standard Forex market presents a mechanical problem. The underlying architecture relies heavily on interest and speculation. To achieve compliance, a broker must neutralize riba. In Forex, this usually takes the form of swap or rollover fees, the interest charged or credited when you hold a position overnight. This flowchart tracks an overnight trade. The top path shows a standard account generating a compounding interest loop. The bottom Islamic account strictly bypasses this loop, replacing it with a flat fee. To address gharar, trades snap instantly to execution, removing volatile delays. These structural adjustments mean you can execute complex, global currency strategies while remaining completely uncompromising on your religious principles. None of these protections apply if you take a broker's word for it. You have to actively verify their regulatory status before making a deposit. The first step is to locate the broker's CMA license number. You will usually find this specific alphanumeric string in the legal documentation or the footer of their platform. Step 2. Never click a verification link provided by the broker. Open a new tab and manually navigate directly to the official Saudi Capital Market Authority public registry to avoid highly convincing phishing sites. Finally, search the database. This layout shows a perfect match between the license number and the authorized corporate entity. You must confirm that the official registered name and their permitted activities match exactly what they are advertising to you. Institutions like FXNX operate strictly within this transparent framework, providing the institutional-grade technology and zero pip spreads required for professional execution. By strictly following this due diligence protocol, you close the door on offshore risks. You transition from a vulnerable target into an empowered, protected participant in the global economy.